Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories in corporate filings. Today, we're diving into a recent announcement from Launch One Acquisition Corp. That is a bit of a plot twist, and trust me, it is not the ending anyone expected. So, what exactly happened here? Launch One Acquisition Corp, a company that is usually quite busy reporting its activities to the US Securities and Exchange Commission, has filed an 8K form. Think of an 8K as a current report, kind of like a company's public diary for major events. The key takeaway from this filing, dated the 30th of January 2026, is that a significant deal has been called off. Launch One Acquisition Corp, often referred to as the company, had previously entered into a business combination agreement, or BCA, with a few other players. This agreement, which had seen several amendments since its initial signing in June of 2025, was essentially a plan to merge or combine with other entities. The parties involved in this cancelled deal included Launch One sponsor LLC, acting as the SPAC representative, Minovia Therapeutics Limited, a company from Israel, Natalie Yivji, or Hana as the seller representative, and two more Israeli companies, Pubco and Company Merger Sub. It was quite the lineup for what was supposed to be a big business combination. But here is the twist. On the 30th of January 2026, all these parties got together and signed a termination and release agreement. This document essentially says, "We're done. The business combination agreement is over." They mutually agreed to completely terminate the BCA. And it wasn't just the main agreement that terminated. All the side agreements called ancillary agreements that were tied to the BCA also automatically ended. So the whole package deal is now off the table. What does this mean in plain English? It means everyone involved has agreed to let go of any claims, any potential lawsuits, or any blame related to this deal that didn't happen. They released each other from any liabilities or damages that could have come up from the original documents, any issues with them, or the whole planned transaction. It is like a clean break. So, what is next for Launch One Acquisition Corp? The filing states that the company and its sponsor are now looking for different ways to achieve their goal of a business combination. This means they haven't given up on the idea of merging with another company, but they'll be going back to the drawing board to find a new partner or a new plan. Now, while this report doesn't contain detailed financial tables like you might see in a quarterly or annual report, it does list some exhibits. The most important one is Exhibit 10.1, which is the actual termination and release agreement itself. That is where you'd find all the nitty-gritty legal details of how this deal was dissolved. The report is signed by Chris Ehrlich, who is identified as the Chief Executive Officer of Launch One Acquisition Corp. This shows that the decision to terminate the agreement was officially sanctioned by the company's leadership. Alright, let's break down what this actually means. This filing tells a story of a deal that was intended to bring together Launch One Acquisition Corp. with Minovia Therapeutics and other entities. However, for reasons not explicitly detailed in this particular filing, the parties decided it was best to part ways. This kind of termination can happen for many reasons. Perhaps due diligence revealed issues, market conditions changed, or strategic goals diverge from a shareholder's perspective. A terminated deal creates uncertainty. Investors who are anticipating the outcome of this specific combination will now be waiting to see what alternative plan Launch One Acquisition Corp comes up with. Will they find another company to merge with? Will they return the money to investors if they are a special purpose acquisition company or SPAC that has a deadline to complete a deal? It is too early to tell from just this report. The fact that they've opted for a mutual termination with a release of all liabilities is generally a positive sign, as it suggests a less contentious end to the discussions. It avoids potential legal battles and allows both sides to move forward more freely. However, it also signifies a setback in their original strategy. The clock is often ticking for SPACs to find a target, so I'll be watching closely to see if they can execute a new plan within their timeframe. Looking at the company's structure, as indicated by the filings related to their shares, they have units: Class A ordinary shares and redeemable warrants publicly traded. The termination of this business combination likely impacts the future value and strategy for these securities. Without a successful business combination, the company's lifespan as a public entity could be challenged. This situation highlights a key risk for companies, especially SPACs: the uncertainty of consummating a business combination. Deals fall apart all the time, and while this filing is straightforward about the termination, the reasons behind it and the company's future path will be crucial to monitor. So, Launch One Acquisition Corp is essentially back to square one in terms of finding a business combination. This is a significant development, and investors will be keenly interested in their next steps. Will they find a more suitable partner, or will this lead to a liquidation of assets and return of capital to shareholders? Time will tell. Alright, that is our breakdown of Launch One Acquisition Corp. Its latest filing, what is your take on this Terminated deal and what it signals for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.